How's it going, everybody? Thank you for stopping by. My name's Antonio, and you're about to watch or listen to a discussion that is general and impersonal in nature, one that will include a lot of forward looking statements and probably some hopes, and no investment nor professional advice of any sorts. And taking action solely based on this discussion will bring your capital in an irresponsibly high risk. So keep that in mind. That all said, though, Mr. Frostad, thank you for investing in time with me, sir.
Good to see you today, Antonio.
The pleasure is all mine. Of course, I was thinking of having you do an overview of the company. Let's maybe take it a bit more specific. Let's start with what you say about your company. You often say that PurePoint has the most advanced exploration portfolio of uranium projects in the Athabasca Basin. That's great marketing. Congratulations on that. But it's a little hard to wrap my head around, especially because of the size of the company. You're a $35 million market cap today. So maybe you can tell me more about what exactly that means, like the most
Sure.
advanced exploration portfolio in the basin. What does that mean?
Well, again, it's exploration is a funny thing, right? We are looking for something that nobody knows where it is yet. And so when we talk about advanced, it's about the amount of work that's been done on these projects. None of this stuff is found quickly. Rarely is it just a Hail Mary and you drill a hole and you find something. So, any of the projects that we have or that we've looked at or that anybody is drilling, quite frankly, in northern Saskatchewan, has had a fair amount of work done on it over time. The challenge with uranium is it's invisible to geophysics, so you can't just fly something over it and find it. So you're looking for clues, you're looking for indications as to where it might be. So it requires initially a fair amount of just prospecting, looking at what's in the neighborhood, looking at what makes sense, looking at a lot of historic data. And then it requires a lot of geophysics, like a lot of geophysics. I would say in the first umpteen years that we were in business, we spent as much or more on geophysics than we ever did on drilling, because it's you cannot go prospecting with a drill. So you are looking for all those indications, all the work that has to be done. And it takes time, and it's expensive. But when I say time, it's also seasonal in terms of the better times to work in that area. There's winter and summer. It's wet up there, so it's much easier to work in the winter. So you'll see a lot more work being done up there when everything's frozen and we can drag things around. But there's airborne surveys, there's ground surveys, there's all sorts of geochemical surveys that are done before you actually put a hole in the ground. And even once you start putting a hole in the ground, your expectation is not that you're just going to hit something the first time out. I mean, you're looking for something that is 200, 300, 400 meters underground, the size of a small apartment building with a rod the size of your arm. This is not something done lightly. So even when you start drilling, your programs, you got to spend a lot of time digesting that what you're pulling out of the ground. It's not just looking at the uranium grades that I've hit. It's understanding the geochemistry of what you found, the faulting of what you found, and then mapping that back to the geophysics so that you can go back and do it again. So it is a process. And we have, I think, staked and worked in excess of 400, nearly 500,000 hectares of property across the basin over the years. And the objective initially is to get rid of as much as you can. You want to boil that down to the most prospective stuff because it costs you money to hold the property. Right now we're working close to 200,000 hectares across a dozen projects. So it's not all greenfield. It's many of our projects have had all the geophysics you could possibly want to do done on them. Some have had extensive drilling. Some have not had extensive drilling yet. We've just started. Some are waiting to take the drill. So when we talk about advanced, we're really talking about the amount of work that's been done along that road that we take to actually find an ore body at the end of the day.
Okay, let's put it like that, because you say it takes time, it takes money, it takes covering a lot of ground. PurePoint got listed back before the previous cycle. You've been in the basin since 2002, I guess, but 20 years this year.
Well, yeah, we started researching and looking at property back in 2002. We didn't actually stake anything till 2004, and then listed shortly thereafter. That was during the last go around. Yeah.
How much money do you think you've spent on the project since then?
All of them?
Yeah, just
Well,
total since you've been
probably.
listed. How much
Yeah, yeah,
money has the
yeah.
company spent?
Yeah, probably. I would say upwards to $50 million.
Okay.
Yeah,
Okay.
during that period of time. Now, there's also a huge difference now than there was back then as well. Back in 2004, 2005, there had been no exploration to speak of done for close to 20 years. So after 3 Mile Island, after Chernobyl, etc., the market just dried right up, and uranium sat at about $10 a pound for close to 20 years. Nobody was looking. And so when we started researching projects to go find back at that point, nothing was online. Everything was in paper form. We would go down to Regina and haul out shopping carts full of paper looking for maps that were 20 years old, with work that had been done by Gulf Oil and Uranga Cell Shaft and the oil companies, because it was actually the oil companies that were originally looking for uranium up there. So during that period of time from about 2004 to say 2006, 2007, which isn't a long period of time, there was an immense amount of work done in the basin. The place we were shoulder to shoulder. Planes were flying. All the geophysics I talk about was being done with technology that was far more advanced than had been done originally. So, during that first period, the only real discovery that was made during that time was by Hathor. And that was the Rough Rider zone. And that was really before the markets melted down in 2008. So there was a huge amount of work done over a very short period of time that really was catching up on decades of no work at all to understand what was going on out there. And that was our entry into the field. And fortunately for us, we've been able to actually survive, if you will, or actually operate through the downtime in the uranium pricing.
It's a good
and hang on to, quite frankly, and to hang on to all of those projects, that we had spent so much time and money getting to a certain point before the markets dried up.
Yeah. Again, it's a good history of the Athabasca Basin. Appreciate that. I also, by the way, just as a side note, appreciate the monthly reports that you put out on the Athabasca Basin. It's interesting to see what's going on there on the ground. I think more companies should do that, especially when their jurisdiction is that interesting. Here's why I asked you about how much money you've spent in the basin so far, though. There's something that I'm careful about as a retail investor, is that some companies like using it as marketing material. They'd say we've spent more money, we have more money, we've put more money in the ground than what our market cap is right now. And that doesn't really mean much for me as a shareholder. You can keep drilling and never find anything. So I like asking what you have to show for it. Your projects are greenfield exploration, so you have no discovery yet. But what do you have in terms of data? If I were to buy today at $35 million, you've spent 50. What is your return? What am I buying that might be discounted there?
Well, again, you can't look at an exploration company like you would any other normal business, because it's not a normal business. This is, we know the numbers as to how many exploration companies in any commodity actually identify a project that goes into production, and it's like 1 in 1,000. It's high risk, high reward, and as such, it's a very different. It requires a different sort of evaluation from an investor standpoint, because we have no revenue. We have no revenue. All we do is raise money based on the merits of our projects, based on the merits of the last work we did with the last money we raised, and with usually the support of, in Canada is very supportive of exploration. Exploration is a necessary feeder into the resource system. Without it, we're not finding anything else to mine. So we find that the governments have to be very supportive of it. In the spending that it takes to do this, and so it's very difficult to compare what we've spent to what the market values us at, because it's based on commodity prices, which are fluid, and it's not a factor of what we've spent. It's always, where are your projects today? What is the opportunity today? moving forward. That's how these things have to be valued.
Well, tell me about that then, because you speak about raising money. You've raised about $12 million in the last 24 months, according to your last MD&A, which for a company of your size is not dilution to sneeze at all. What do you have to show for that 12 million? Like, where has
Sure.
that money brought your projects? That might be interesting to me.
Sure. So, during the downturn, what actually allowed us to maintain all the projects that already had a significant amount of investment in it, and not just write it all off, was our Hook Lake project with Cameco and Orano, and that project, which sits over adjacent to NextGen's Triple R or Arrow, I should say, and Fission's Triple R, was a very important project for our partners, for Cameco and Orano, and as such, they were providing us with a significant amount of financial support and technical report. And actually, we were splitting it up. So it was actually a reasonably cheap project for all of us during a downtime in an area that continues to be highly prolific. So during that period of time, I would say to a shareholder, we actually made as much money in management fees from operating that project as we spent in overhead. It was a fairly flat process. So because of the money we had spent previously on our other projects, we were able to put those aside. They did not require money being spent on them in order to hold them. And I'm again to hold projects in Saskatchewan, you have to continually either spend money on it or you have to drop them. And we'd spent adequate money on them that we could continue to hang on to them. So back to your original question, where'd all this money go? It's the fact that 2 years ago, as we've already talked about, this is not a cheap endeavor, any of this work, and especially when you've got 11 other projects to take a look at. So we see this as an opportunity in the market, as there always is in the resource sector, to when there's a lot of money coming into the sector, to utilize as much of it as you can to advance those projects as fast and quickly and hard as you can to take them to that next level. And so we've literally pulled the sheet off of 10 projects that have been in a bit of a time capsule for the last 8-9 years. And we're applying new technologies, new thinking, new understanding of the area to them. So we've been we've drilled at a number of our projects. We've done more geophysics over some of our other projects to bring them up to a drill ready state. It's not a small portfolio, but but we've applied the money where we thought the best use of it was to get those projects advanced. So I think right now we're at a position where we have got, between Hook Lake, between Red Willow, between Turner Lake, we are now ready to go out, and these are at a point of, we're honing in on things on all of those. We are vectoring in on things, which is always difficult in this business. And our other 4 or 5 projects, we brought them to a state of readiness where the opportunity affords us, we can either bend those out, we can bring in other partners, or we can apply our own drills to them, depending on the timing and where we are.
You've got 9 projects today. What is the sort of the plan to add value to shareholders here going forward? Like, will you be looking for a transaction on a couple of those during this cycle? Do you have reasonable expectations for a discovery that will increase the price? Are you, for all I know, you might be looking to produce free cash flow? What are we thinking here, Chris?
Well, as an investor, what are your expectations in terms of adding value? I mean, it's not just, I'm going to make my share price go up. I mean, I can talk to a dozen Antonios and maybe make that happen. I don't know, but in our case, I can tell you that of the 27 uranium companies that are listed in Canada, we are all riding a very common curve that we've seen happening over the last 2 years. And I can show you the graphs. I mean, we represent the average stock movement of all of the uranium companies listed in Canada. We're just that average. So the question is, you can either just ride the uranium price and hope that we represent it better than others, but the only other way we can add value is to find something, right? Is to actually find an asset that we didn't own yesterday. And the only way we're going to find that asset is to apply funds at drills and get the drilling going, be that through partnerships or money in the market.
So you're hoping to find something in the ground
Every
and
time
sell
we
that
put a drill in the
asset?
ground, that's what we're hoping for. Absolutely.
Okay, so you're looking to transact, basically. That's the hopes there. Maybe now could be a good time, by the way, to tell me about a little bit about who your neighbors are, and whether you've spoken to some of them in that regard, in the regard of a transaction.
Well, when you say transaction, what are you talking about, for the whole company, or a
No, just
particular project?
one of the
Or
assets, or potentially, all the whole company. Maybe another company comes with a strategy or something. I don't know.
well, I mean, we all, first of all, I'll tell you, we all know each other very well up there. There's not tons of us, and we've all been up there for a long time. And we work for each other, with each other. We all sit on the Saskatchewan Mining Association. We work with the government, the province collectively. We work with local communities collectively. We go out and have drinks regularly. So I mean, it's we do know each other, and we talk about things all the time. In terms of transactions, I'm sure I mean, if I can't tell you if I'm talking about a transaction with anybody. I'm a public company. I'm a publicly regulated company. So what I can tell you is we always talk about transactions. We always look at each other's projects. We always bounce things off of each other. And as if things make sense and things arise, you'll see those transactions come about. But as I said, I certainly can't start naming names.
Sure. Maybe I could, because Cameco is an interesting partner that you already actually mentioned. So I guess that's fine to talk about. They are a uranium producing company, though. So and credit for this question, by the way, goes to Adequate Ryan on Twitter. But what do they want with you? Like, what's their deal? What do they want from you? What do they
What's
want
their
with
deal?
you?
What's their deal? Well, there's a couple things there which are interesting. First of all, and this started happening about 15 years ago, when major producers in all commodities started getting out of the exploration business. Not entirely, but for the most part, what they found was that their shareholders weren't paying them to take big risks. They were paying them to manufacture metal or whatever they're in the business of manufacturing, and that by relying on the exploration companies, where the investors understand that this is a high risk venture, that you put your money in, you pull your lever, and maybe you win this year, maybe you don't. That they were set up more appropriately to take on those risks. So the majors truly do lean on the exploration community as a whole to find new things for them to then acquire, because it's cheaper for them to acquire it after the fact than it is to spend all the money looking for it. That being said, when we first got involved with Hook Lake and Smart Lake some time ago, it was because at the time the markets were hot like they are now, and Cameco, because of and Orano, quite frankly, because of the corporate structure and the way they went at their exploration, we actually had access to more money than they did to put in the ground in exploration. And at the time, NextGen and Fission weren't even in the area. So this was a project that Cameco and Orano had advanced for quite some time, and they really wanted to take the opportunity to dig into it. So we were made the offer to earn in on that project, which we did and operate it, and we've continued to operate it ever since. Now so your question was about Cameco. Let's try my question for a second. So once they find something, they will acquire on a project by project basis, quite frankly. So you're not going to see Cameco buy an entire exploration company that's got projects all over the place. They don't care. They'll wait till there is a property or a project worth acquiring. And typically when you do see a major buying a junior, it's because of a particular flagship project that's a situation. So in Cameco's case, Hook Lake represents, and Orano's case, it represents an important project to them, one that's being looked after by us, and they trust us to look after it, and we report with them regularly and talk to them regularly. They're only paying 39% of the freight, so they can do a lot more work on that project cheaply because it is a partnership. And when something comes out of that of size and nature, then they can choose to acquire it or not.
You see
And they
that.
do look at our other projects. I mean, don't get me wrong. They're great partners. They've been on all of our projects for the most part. Take a look, let us know what they think. And but it will be a project by project basis when something is found before you see a major picking it up.
Let's take this, and I guess forward-looking statements and in the realm of speculation here, Chris, but you say the companies, majors don't buy out juniors with a dozen projects or something along those lines. But again, in the realm of speculation, at the current, $35 million market cap, let's imagine somebody comes along with a briefcase full of money or a check or magic beans or whatever they bring these days. They give it to you. It's worth $35 million. And they say, here's the money, Chris, get out of these lands. What do you do?
Well, it's not my call.
Okay.
If somebody makes an offer on the company, it's up to the shareholders. So, again, we as a management group, as the board, would have to evaluate that offer and determine if we think that is an appropriate offer for our projects, given where they are and what they are and who we deal with. And we would either support it or not support it. But at the end of the day, if somebody makes a formal offer, we would have to take it to the market, and we would have to call a meeting. And if the shareholders thought it's time, or that it would be in better hands elsewhere, or who knows, then that's where you go.
But so $35 million would not insult you.
Well, it is, the thing is, we can talk about who's undervalued and what's the value of what, but this is all exploration property, right? And quite frankly, it is an efficient market, despite what people want to think. So the market is telling us what this property, what they think the company's worth. You can't argue with it. You may not agree with it, but it's what it is. Somebody offers you $1 million for your house and you think it's worth $2 million. It's still only worth $1 million if they're the only offer on the table.
Sure, that makes sense. I do expect you as CEO to think that there's more potential to build this company into a bigger market cap. Pretty much, that's why I'm asking these questions. And in being so, I was setting it up for another question, which would be the question of the insider ownership. Because when I opened up your SEDI filings, it didn't seem like insiders have been buying the stock in the open market, and it was trading at almost half of what it is right now, not too long ago. So I was just thinking, if you think there's more potential in the company, how come aren't insiders buying it on the open market?
Well, now you're asking about, there's not that many insiders that we're dealing with here, and we've been long in uranium for quite some time. We've held a lot of these shares we got early on. The options we still hold are of value to us. It all ties into compensation and what makes sense. So, for me to go in and start, dribbling up money is and that the question goes back to what end? Like to what end? Is this just to make somebody happy? Is this to make an investor think that, is it a promotion? Is it a promote? I've seen lots of situations where, the CEO goes in and he's buying a few shares every day, or he's buying it all the way down, or who knows what's going on. But, what's the context? What are you looking for as an investor?
As an investor, you want to know that the management is aligned with you, and that they're going to get paid simultaneously with you. Obviously, getting paid for the work that you do on a daily basis. Nobody wants you to do that for free. I wouldn't do it for free, certainly. But we want you to know that you're aligned with us, and that you're buying when we are buying. But
is buying how you align? Is that how you align compensation?
How you align? Yeah, because
I'm not an investor in the way that you're an investor, right? I'm a shareholder. I'm an employee of the company. I'm a director of the company. I wear a lot of hats. So, what's the context here in terms of should I be dumping my life savings into this company?
I think
is all your money bet on PurePoint?
No, well, to be honest, most of my money is locked up in two of my businesses, but that's different. They're not publicly listed companies. I get your point. It is that it's simply to know that you're going to act in the shareholders' interest, as opposed to acting in your own interest to secure a bonus or something along those lines. And I think that being aligned with the shareholders incentivizes you to do that more.
Always, absolutely, always.
Well, you brought up promotion in the conversation, so now might be a good time to start talking about it, because if you believe this is a good story and you're here telling me the story, which I assume you want to do more. Now, you're not paying for this interview, but I can assume that you're doing more efforts to market the story. What's the marketing strategy there?
Well, absolutely we are. And I mean, what I would say with regards to marketing and promotion when it comes to these stocks is you cannot promote yourself out of a bad market. I mean, it just ain't going to happen.
Right.
And, you can push that rock up the hill as long as you like, but eventually it's going to start rolling back on you. But when the markets are happy and good, yes, you can give yourself a bit of an alley-oop because you want people to know, you want to be on the name. So, for the longest time, we were not putting a ton of money into communication and the like, because we knew that it wouldn't help. It really wasn't going to. We were dealing with a market that really wasn't interested in uranium per se. So we just had to keep things, moving properly and efficiently and cheaply. I mean, we operate on a very low overhead for quite some time now. And that was part of it. It was not money well spent. However, when the market came back, we found ourselves in a situation where we weren't that well known all of a sudden 2 years ago. And I've always said, because you're not talking about a lot of companies. I mean, there's only 11 uranium exploration companies listed in Canada. So it's not a big crowd. And my concern wasn't people looking at the company and saying yay or nay. It was just being on the damn list. So our efforts over the last year or so have really been to get us to make sure that we are on all the lists. When somebody's looking at a uranium exploration company in the Athabasca Basin, we'd better be there. And if we are there and they are doing their research and looking at what's out there, we're pretty comfortable that we're going to be, in the top pick. So that's been our messaging focus. We found a few things along the way over the last year or two. First of all, I think investors like purity in what you're dealing with. We saw this with other companies in the basin too, where they did some development, they did exploration, they did this, they did that. It was too many things, and it seems investors either want to invest in a development company or they want to invest in a exploration company or in a producer, because you know what you're betting on, what the deal is, and they want to deal in single commodities. You start, if you're either in uranium, that's fine. If you start bringing in other metals, sometimes we find the market doesn't care for that, because now they're really not sure what they're trying to value at the time. And so we found as we came back in, and all of a sudden we were trying to talk about 12 projects, the messaging was a little overwhelming, to be honest. So, we've adjusted our messaging a lot so that we can focus on, a project at a time, or more closely, that, we try and keep the messaging simple, and keep it focused on, the projects that we think have the most value and that investors can understand on. From how do we go about that? Where do we spend money? Yeah, we're spending more money than before, and we've had to be pretty careful about making sure we get the biggest bang for our buck.
Can we get more specific there, though? Because I know you've used Red Cloud Securities.
Yep.
I've seen you on Crux. So what else are you paying for, and how much money are you spending on that?
Well, how much are we spending? Well, we're probably spending, it's in our statements, I would say $300,000 or $400,000 a year now.
Okay.
But what we've also found is that most of our marketing is focused in Canada, because that's where the market is. That's where the resource market is. It's where our people are. We've listed on the OTCQB. We will be down in New Orleans at the show there. They've got a fabulous show later next month. But to spend a lot of money marketing to the United States is like trying to boil the ocean. So do I spend my dollar down there, or do I spend it in Canada, or do I spend it in Europe? So we've also done some things we do Crux, as you mentioned. We've done those things where we think we can get the most exposure. And again, it's to get people to look at us, like take a look, because again, there's There's not that many of us. So if somebody's going to sit down and actually start analyzing this stuff, we want to make sure we're popping up. And I think we've done a pretty good job of that over the last little while, is, making sure that we're on the list, and that we're presenting ourselves in a light that people can understand that there is upward value coming our way.
How does that, for $300,000 to $400,000 in a budget, how does that compare to your drilling budget?
Well, I mean, the last 2 years we've probably spent, we'll spend more than $5 million this year. We spent $5 million last year.
Okay.
Next year we've got more projects now on the books to start drilling. So, we're coming into a season right now where, what we're hearing is that there's a lot of money coming in now into the fall into uranium names. So, you've probably seen a few things announced. I know Lotus, down in Australia just raised 25 million, but I won't tell you the number, but their book was significantly bigger than that. And yeah, there's money coming this way. So we all have to be prepared to, acquire, if you will, as much of that money as we can possibly, spend productively and apply it, because, this little bull market of ours isn't going to be here forever. And so our objective is really to take advantage of it now while we can, and to get as much work as humanly possible done, while the windows are open.
So that means that you'll be putting mostly money in the ground. And I'm sorry for continuing on our financials here, by the way. And feel free to tell me off or just stand up and leave if I cross any lines. But how does that expense compare to your total take home as the leader of this company?
Well, I can tell you that what I make, because it's all public information. And I guess I'd almost have to ask, and I'll tell you the number, but it's I've seen this question asked before, and it's what's the context? Like, what is the context? What do you think? What do you think I should make? What do you think an exploration CEO should make, and in what and how should that payment be made in a way that as I mentioned before, you don't have a bottom line to point at. You've got somebody who is running a regulated business, so there's the onerous aspect of that, and who is raising money, as I said, based on the merits of the projects you've got and the work you've done, and getting it spent in the most productive ways. So, there's always a lot of talk about the juniors and who's making too much and who's not making it. Well, it's never about who's not making too much. But I mean, my question back to you would be, what are you doing with that number? How is that number meaningful to you, as to what I earn, or what any CEO earns?
I use it as a relative analysis tool, where I will make ratios between different things. I would make a ratio between the amount of money that you're putting in the ground, the amount of money that you're putting in your own pocket, the amount of money that you've invested into this company relative to the amount of money that you're making each year. So I make these ratios and I compare them between companies. That's not the most important part, obviously. And I'll also caveat this by saying that I'm inexperienced, and most of the time I have no idea what I'm doing.
And the confusion is, you also have to take into account that this isn't my company. This isn't a private company anymore that I own the most of, or anybody does. And so there's that aspect of it as well. But yeah.
No, when I call it your company, I call it that your vessel, meaning you're steering it. So it's that those are the things that are important, I guess. Yep.
And I see a lot of people focus on total comp and what people are making, and it's never within a lot of context, because a lot of this stuff is made up through equity, through options, and most options that are granted in this world never see the light of day. And when they do, people get all upset. For the longest time, up until recently, my compensation was $120,000 a year, $10,000 a month. When the workload picked up considerably in the last year or two, we've given ourselves a raise, but not a big one. And because we know that we are, despite the fact I might say it's not my company, the fact of the matter is, it's, we have to make sure this thing continues to operate. And during the lean times, it can only afford so much, because you have to raise that money and you have to get people to invest in it. So, I think we've been pretty reasonable about, about our compensation and how it's aligned, and our directors, get paid $10,000 a year to sit on our board. So we make that up with options, and many options that have fallen off the table year after year. But that's the game. That's how we align ourselves with what's going on. So during the downtime, we have to tighten our belts, and during the better times, things are going to go in the other direction.
I try to remain reasonable as well, because I know that you cannot run this company out of a box under a bridge, obviously, and we don't want you to be stressed financially on a personal level, because we want you to perform.
Because I'll go do something else.
Level. Exactly. Yeah. No, exactly. That's fair point. Or you figure out a different way to take money out of the company that's not as straightforward as a paycheck, which also happens a lot. And to the credit of junior mining CEOs, you got to get paid. And the market wants you not to get paid pretty much ever, if we're being, that's what the sentiment seems to be out there. That's not fair too, but it just has to be within lines. That's why I like making these ratios, because if you've invested, if you bought seed shares for $20,000, but now you're taking home $500,000 each year, and you're not buying any shares, and then at the same time, you spend $1 million on marketing and only $1 million on drilling as well, then there might be some slight off balance. That's clearly not the case here, but those are important questions to target.
And you're right. I mean, the fact that you're doing comparables between, you're comparing these things, and we do that a lot as well. We compare ourselves to each other, to other industries, to other commodities and whatnot, and then you're looking at it in the right context. To simply ask the question, how much do you make, or how much does this guy make, compared to that is all you're really comparing it to is what you take home, and what uses is that to you, unless you're looking at it within the context. Yeah.
Different countries too. Average paycheck over here in Belgium about 23,000 euros annually. So you tell me you make 200, to me that's 10x. To you, if you're living in Toronto, you're barely making ends meet. If you want to live normally.
I'm living under a bridge in a box.
Yeah. Let's talk about drilling though, Chris. You often say that uranium in the Athabasca Basin can be very concentrated. That's the explanation that I've heard you give before. Just like ISO, I guess, and their high grade deposits. They found that on a relatively small piece of land. Help me understand what your drilling strategy is, given that you know all of that. Like, how is that drilling strategy? What is that drilling strategy? And how is that different than if you were drilling in Namibia or anywhere else outside of the basin?
Oh, I see. Well, it has to do, now we're into geology and how these things are formed, right? I mean, this isn't like gold that is layered in a vein and you can track it and trace it. These things are pods, as we said before. And it's very different than the way uranium is deposits look in Utah and Colorado, or in Niger. It's all different settings, the way it was formed. And the basin is always been, there's been about 3 or 4 different theories as to where it all came from. Where did the uranium come from, and where do you look for it? So it's I don't even know how to put it. There's a variety of different ways to go at it, because the deposits are sitting in very different ways. Up until about 10 years ago, nobody thought that you were going to find uranium below the unconformity. Now that is to say, the Athabasca Basin is a bowl in the Canadian Shield full of sandstone, and that unconformity is the bottom of the bowl. So where that sandstone meets the basement rock, that's where all the uranium's supposed to be. Well, all of a sudden, Millennium is found by Cameco, and it's 100 meters below the basement. So now we start looking there. Some of it is at the ISO's is flat lying along that unconformity. But in other areas over in that area, we see it running deeper and deeper pods, like at Eagle Point. So there's not a strategy to say, okay, I'm only going to look at stuff here, and I'm only going to look at stuff there, and I'm only going to look at stuff that's deposited in this way. it is where it is. And we've done enough drilling over the years across this entire basin that we know, when we see something, we can now model it. We know, okay, that looks a lot like this, not like that. When we started drilling out at Hook Lake, there was no basement hosted deposits. And so our partners were insistent that we were always targeting that unconformity. And as it turns out, we've never hit uranium mineralization any shallower than 50 meters below that unconformity. So you also can't get stuck in a model. You got to get a little more creative than that as to where it may be. So, I've said this before, there's most of the holes that are drilled in the basin come up with that much uranium. So anytime you find anything over even 0.005 or something anomalous, you really have to take the time to follow it up. And you're not just looking for uranium indicators. I mean, certainly the best indicator for uranium is uranium. But, we look for other things in terms of boron, in terms of the alteration, because, uranium was mobilized through the use of a lot of heat. Like, this was really hot stuff and a lot of oxygen. So as it was mobilized, as it was moving, it was literally cooking the rock around it. So as you start to run into that sort of altered rock, that's a good indication that you're in the area of some sort of mineralization event. Doesn't mean it happened. Doesn't mean it's there. It may have just been passing by. But the minute you start seeing any sort of anomalous uranium, or appropriate structure or alteration or boron in cases like this, there is a host of other things that we trace, then you need to follow it up, because you could literally be 50 meters away from ISO's hurricane zone, and you wouldn't pick it up till you actually poked a hole through it.
So the strategy is to just keep drilling. That's pretty much it. You got to drill it to know. But if we were to get a little bit more specific, though, in terms of the strategy,
it is
exactly where will you test that thesis this year? I guess are you focusing on Red Willow? Or are you going back to Carson Lake to do geophysics first? Tell me more.
We've done all of that. I mean, we did a lot of geophysics over the summer, and we were just getting those interpretations back. And what that was, the objective there was to get our project up to a drill ready state. Okay, we want to start, because the world gets bored with geophysics pretty quick. So we want to make sure that we can start poking holes in this stuff. And that was the summer work. From a drill standpoint, I mean, earlier in the year when we drilled out at Red Willow, we tapped into a significant amount of uranium. And again, I've said this before, we're not drilling into a deposit yet, right? And a lot of people will hit uranium and start, screaming discovery. We have now got something to chase. And that's what you're always looking for, is something to follow up on, be it a structure, be it uranium, being what have you. So in this case, we've consistently hit the same amount, the same the same uranium over 1.2 kilometers, which is unheard of. So over this broad, huge area, there's a lot of uranium was flowing over it at some point in time. And we're looking for where that deposit landed. And that's what we're chasing in Red Willow. And we'll be back there later this month.
Aren't you still waiting for assays though on one of those projects? No. We've got assays. We haven't. We'll put them out in a week or two when we start talking about what we're going to go back and drill. Okay.
The assays themselves, all they prove is that we have uranium. We've got anomalous uranium. We put out the counts per second and the elevated uranium or what have you. But again.
But it's the percentage that we're going to see in the assays, right?
Yeah, I mean the assays. What you'll see in the assays are or you're going to see a percentage uranium. But what I don't want to confuse the market with is that we've just hit a deposit, because we haven't. Okay. We've hit uranium. It's broad based. It's nothing I would mind today because it's small, but it's continuous, and that's the message. And the difficulty in this industry is that it's hard to disclose a technical success without the world dumping on you. And so, here we are chasing up on an outrageous amount of uranium over a broad period, looking for where the deposit hopefully found a home. Mm-hmm. And we've hit this thing over and over and over again, so we know that we're in that region. Yeah. That's the opportunity here. And that's what we're going to go back and drill. The other opportunity is Turner Lake, which sits butted up against the hurricane zone. All right. So There's a property that Cameco has worked over the years. They've worked it right up to our project line. We've got all the geophysics are done up there. We've got targets picked. We are right on trend with the hurricane zone. We've never put a hole in that, so it's time to go up there and drill that and see what's down there. And as far as Hook Lake goes, we're all set to start drilling a whole new region which is parallel to the Patterson trend, which is closer to the now known heat source of where all that mobilized uranium came from, and where we actually 12 years ago hit uranium. But because we weren't looking for basement hosted deposits, we moved over to the Patterson corridor where all the action was. So, we've got outstanding targets to get back to and get drilling. And that's where the discoveries are going to come from. And that's the objective, is to keep drilling till we find what we're looking for, and to keep tightening up that story. It can't be, we're not going to hit a deposit every time we put a hole in the ground. Nobody is.
No, nobody is. It's true. And drilling is not cheap, though, and you're going to need more money to do that. So let's talk about your liquidity situation and where you're going to get all that money from and stuff like that. Let's start with your position. Debt, no debt, but cash. What's your cash situation looking like right now?
Who's going to lend us money?
Yeah.
Yeah, we've got about $3 million in the bank right now. And that'll carry us into the new year if that's all the money we see. We just recently announced our base shelf prospectus, which is really, we've been, it's not a small endeavor. It took a few months to get it put together. It's not cheap, but it changes our ability to raise money. And what we've experienced, what we've seen in this market is that it every month or two, all of a sudden the phone starts ringing and there's money coming into the market. And if it takes me 2 or 3 weeks to put together a private placement, I could miss it, or the work and costs that's involved. And what this prospectus will allow us to do is lean on it. It's a Canadian mechanism. I'm not sure if you're familiar with it or how it operates or why we've even done this. But what it does is it eliminates the need to focus only on accredited investors, so we can sell into the retail market, or our bankers can sell into the retail market, and it alleviates the 4-month hold, which is which usually results in way too many warrants sitting out there as well, because you're trying to accommodate the fact that there's a 4-month hold on this. So in that respect, we can react. We are much more attractive to the bankers from a financing standpoint. We are much more attractive to investors from a standpoint that they have free trading shares out of the gate. We can look more. We can look at bought deals, which you couldn't before, and a variety of things. So for us, we've established this in a way that when we see the market reacting, when we see it's time, when the right time to raise money is at the right price, we can move quicker than the average bear, and that's we think, because this market is volatile in that respect, we think that's going to help us moving forward.
I'm glad you mentioned the options and warrants, because I was almost about to miss that. But if I have it right, and I'm not a math brain, but if I have it right, those represent about 1/3 of your fully diluted shares. Do you know any of the details by heart, and do you expect any money from those to be coming in soon?
Sorry, do we know any of the
details on the warrants and the options, if you know them by heart in terms of strike price and
well, we've got quite a few coming up before the year is out at 8 cents, probably a couple $2 million worth, and so we'll be able to lean on that. That's literally a free financing when that stuff comes in. If they're in the money. Most of the options that we issued over the last year so were at 20 cents. So.
I saw that.
So that's we don't have to worry too much about those at the present time, but that was where we were able to set the warrant price.
Well, I actually like it if the warrants come in earlier, because that way, if the market takes off and you start running, they don't represent any drag on your share price, basically. So, I like that. It's a good topic right there, though, because when we talk about the way that you raise money and the base share prospectus and all those other things, is because it's being brought to my attention by Corgi Capital that the structure of flow through share deals is not great, because there is a danger of the buyers of said shares to be doing that for tax purposes, basically in easy gain, where the way I understand it is that they buy shares, they get the tax deduction, and if they want to, they can turn around, open a short position in the company for that same amount to hedge their position. And that might mean that you're not taking on shareholders who really want to own your company. They just want the quick gain. And at the same time, if I also get that correctly, is that Canada wants you to spend all that money that you get through flow through shares within a year. So it sounds like this type of shares incentivizes it incentivizes you to be, no, I don't want to say careless, but incentivizes you to spend the money quickly.
You're not wrong. Yeah, I mean, you're not wrong. And we've seen it when it first came out, the whole program, it could be dealt with carelessly. If you I mean, there is a risk of underspending it. If you don't get it spent, and you actually have 2 years, what happens, the reason it's a year is the way it's renounced and the way that we give it. Like, I'm sure you understand how this works. You buy $100 worth of my shares, I'm going to give you $100 tax deduction. Why? Because I don't have any revenue to write that off against. But you have to be Canadian, and I have to spend the money in Canada. So it's limited in that regard. If I don't get that money spent in time, I have to take back your tax deduction, and that could be a company killer. Yeah. So there is a danger, and you're literally better off, buying $1 million worth of stationery or whatever the heck it takes to get this stuff spent. And it has to be spent in the ground, so you can't buy stationery. But so it can be a risk if you over raise and flow through. And so we've been, I mean, historically we've raised. We wait till the end of the year when it's really the best time, or when it's usually more available because people are figuring out their tax situation. And we're pretty careful about making sure that we only raise as much as we know we're going to spend in the next year or so, and that we're not in a position where all of a sudden we just have to spend it whether we want to or not. And we've seen that happen with companies, and it's tough. Now, having said that, your other point, in that, we typically get a premium, right? So, I mean, we raised money at 14 cents in the last couple of rounds when we were trading at 9-10 cents. So that's a good thing for everybody. But you've got what a lot of the funds will do, the flow through funds who are buying this stuff up, is they will, if they get a good price on the warrant, as soon as the 4-month hold comes off, they'll sell the share and sit on the warrant for a while. Yeah. So you can, and that's also a danger in this flow through market, is some of these funds will just dump your shares as soon as they can, as soon as they've scraped off the tax advantage. So yeah, absolutely, you have to be very careful about how you raise that money, and
how do you do that? Do you vet or did you vet the people that you sell your shares to, or because then you got to get picky, and that might
there's
hurt
different
you.
funds. Typically it's not, we're not selling flow through shares to 1,000 different people. It's maybe 2-3 funds, 4 funds who will pick up a large bulk of it, and then those flow through funds, what they do is individual investors will invest in a fund which will run around and invest all that money in a variety of Canadian exploration projects, and then they will renounce those back out to those individuals. So they're kind of a middleman in all of this.
So you know who they are, and if they turn around and sell your shares, you can go pee in their mailbox.
Absolutely.
But it sounds to me like the raising money for small companies is who would have guessed is challenging. And specifically in the uranium space might not be, it's probably not as easy as armchair quarterbacks like myself might think. So is that the biggest risk that your company faces today, or is there something else?
Is not being able to raise money?
Mm-hmm.
Oh yeah. Well, no, it's not the biggest risk, not by any means. But
what do you think is the biggest risk? I like asking the magic wand question, which asks you to imagine yourself holding a magic wand, and you can just wave it at one problem. You make that problem go away. What would you wave it at?
The risks that we spend the most time focusing on is hanging on to is making sure that we're hanging on to our projects, that you're spending the amount of money that you're getting. Like, you have to get things filed with the government that you could lose your project overnight if you don't get them filed properly. And it does get quite tenuous, especially if you're managing more than a property or two. We've seen situations, if we're off the air, I could tell you some funny ones, where, people have lost, like you wake up one morning and all of a sudden half their project's gone because they were a day late getting a report filed or getting a check in somewhere. And that's not a small risk. So a lot of the risk is not being able to spend the money you've got. So when we look at things like, people will talk about the difficulty in getting permits or the difficulty in finding a drill crew, et cetera. If I've raised $3 million and I have to get it spent in the next 3 months, and all of a sudden I haven't got a permit or something happens that I can't get that money spent, that's a huge risk. So our risks seem to be more, I mean, if you're going to talk about your biggest risks, I mean, it's operational, because things can go really bad really quick. We work in isolation. We work in the woods, for crying out loud. People get hurt and you're miles away from any sort of help. So safety is a big issue, huge issue. So safety, regulations, permits, managing your projects, all of that stuff that goes on behind the scenes is a huge risk to making sure that, your company sees tomorrow.
Yep.
We've seen companies where, they've inadvertently lost all of their project like overnight. And it's devastating. You can imagine, just because they didn't get something filed properly or spent on time.
Mm-hmm. That's an interesting discussion in and of itself. I'm looking at my clock and I see that we're already over time. But since we're in the hypothetical realm here, let's have a little bit of fun with it, at least. I like asking another hypothetical question. I call it the gun to your head scenario, where somebody would be holding a gun to your head and they would want you to sell all of your positions, take all of your money, real estate, whatever you want to, and invest that money in 3 companies, with the only caveat, it cannot be your company, so it can be PurePoint. Which other companies would you pick, Chris?
Well, I can answer that in a couple of ways. First of all, as you stated when we first opened, I can't give investment advice, so I probably wouldn't want to say those things out loud. But more importantly, it's something I said out of the gate. We know each other quite well, all of us companies, and I would not. And we all have a great respect for each other. We share service providers, we share people, we work together because it's not a competitive environment from where we are. So, to be blunt, I can't give you 3 names, and I wouldn't give you 3 names because how would that serve me? There's a lot of good companies up there, a lot of good management, a lot of good projects, and I'm not going to sit here and tell you I like one of them better.
Would you be looking, as an insider of the industry, though? Would you be looking specifically to remain within the Athabasca Basin, or would you be looking in, say, Africa?
Well, again, as I mentioned before, all of these, it's very different businesses, no matter where you are, right? It's not just a matter of digging a hole. We would stay in the basin. Strategically, we'd stay in the basin because it survives the test of time. Even when uranium was in the basement, people remembered the Athabasca Basin. They very quickly forgot about the Makasani Plateau or what have you, right? I mean, it's a good name to have on your shingle. But outside of that, we have an organization that's been built within Saskatchewan that knows how to operate within the rules of Saskatchewan, which understands the geology and the settings and the history and everything that goes on up there. All our service providers are there. For us to open up shop in another jurisdiction, I think would be overly disruptive and expensive to what we do. I would just as soon start up another company to, and specifically bring in resources and projects to look after that than I would have PurePoint start to drift outside of our current jurisdictions.
Sure. Okay. Well, Chris, I appreciate your words as an insider. Thank you for investing in time in me today. Is there something that you had hoped we talked about, but I failed to bring up?
No, I think it's been a good talk. I think I recognize, and I think we all appreciate that it's difficult for investors to invest in junior exploration. It's not simple. and it is insanely high risk. Half of the money that goes into mining around this planet is raised in Canada, because we have the strictest disclosure laws, rules, and as such, we have created an investment environment that understands the resource investment. It's not easy, and it is fraught with all kinds of issues if you don't really understand it. So I think opportunities like this to discuss things that people may misconstrue, that assumptions that are being made that are inappropriate. I mean, we don't do ourselves any favors as well when we put out press releases that try to make things different than they really are. Mm-hmm. But all of that is the world we live in. So no, I appreciate your time, and I appreciate what you do here, and we'll continue to look after investors where we can.